Hello, everyone. Excited to be here. What an exciting day, first of all. Like so many of you have probably heard, but today is really a historic day because 15 years ago to the day, one of the very earliest adopters of Bitcoin started running his own Bitcoin node, and that's Hal Finney. He tweeted out that he was running Bitcoin. And of course, the other thing that's happening today is 11 ETFs got approved, Bitcoin ETFs. And so we're going to be talking about kind of what lies in between there, like between Wall Street playing around with Bitcoin and cypherpunks who are running command line software in their living room somewhere. This is kind of going to be more like real world, everyday conversation. We have a great panel because we have with Will, head of product at Zaprite, somebody who's working with where the money comes into the business. And then we have Joe, CEO of Unchained, who is working with the storage of Bitcoin, practically speaking. And then we also have Joe, who's working on the accounting side of things. So it's a really well-rounded panel. I'm excited. So let's do a temperature check first. Like who in the audience today have already integrated Bitcoin somehow in their business? By a raise of hands. Yeah, we have some people. And then who's thinking about maybe doing that? A lot more. Exciting. Very cool. So the question I want to kick off this panel with is like the question of why now? Because we're 15 years into Bitcoin, into this story, and we've seen a lot of things change. And I want to ask each of you, like, how do you feel like things have changed to the point where this is an excellent time just to, like, why is it now worth the effort for somebody who's operating a business to really start integrating and kind of operating more on a Bitcoin standard with their business? Anyone who wants to kick it off?
What if Will maybe predates us in some of his time in the space? So I know some of his stories are really excellent. I can just say, I think at Unchained, that what I can speak to is the just the quality of services that are out there. When we started in 2016, it thought custody was, through hardware wallets and things that were there were an imminently solved problem, or it was kind of there, but it's only gotten better. And the quality of services that exist now make it just way more possible, way more user-friendly. It's always a moving target in a long-term horizon, but the difference of your choice as a business or an individual wanting to accept and work with Bitcoin today, it's a huge step function change.
Yeah, I'll just throw out, it's still really hard to get people to pay in Bitcoin, but I think that's slowly changing as well. And I think you have some kind of pockets in certain cities where you can kind of get that more likely. If you go out to a vendor, try to set them up, you get them set up on Zaprite, right? And then nobody pays them in Bitcoin. That can be it's detrimental to their continuing to do it. I think obviously we're in Austin here. It's a place where you can do that better than most places. There's a few other places around the country where I think we're getting closer to there, where you have enough Bitcoiners, and then it maybe is a messaging of, hey, also maybe you spend your Bitcoin occasionally as well.
Yeah, and what I'll add is, if we were having this discussion 5 years ago, you might be talking about low millions of people that even had access to Bitcoin at all. Now we're talking about multiple tens of millions of people, your customers, have Bitcoin. Now, they might want to keep it. You certainly should want it, right? Is that you're operating a business in an environment where it is impossible for you to save without taking risk, right? Big risk. I'm not talking about like, just keeping it in cash, but any other vehicle that you're going to put it in comes with risk. Bitcoin does too, right? But there's not an intentional person pulling strings above you that says that keeping your money in money is going to eventually bankrupt your company, right? If you're not using Bitcoin right now, I think that one of the things that you'll run into eventually is that you'll question yourself from 2 or 3 years ago saying, I had this opportunity to do this. Now our savings are completely melted away by design, right? And the only other way other than, putting it into Bitcoin is to take a bunch of risk by putting it into some other security or some other asset that is supposedly the safe way to do it. But I think they're going to suffer from the same things that come with inflation.
Yeah, this reminds me of the early 2000s when people were talking about what is your internet strategy. Everybody needed one. But it seems like the issue is a bit more pressing because not only could you lose business, like you have trouble finding your customer and serving your customer, but your existing balance sheet is actually in danger right now with the bond crash and inflation picking up a lot. So yeah, maybe let's get in the weeds a little bit. Like, what does it mean to put your business on a Bitcoin standard? And I was also curious, what is your take on all of you? What's your take on how this changes somebody's psychology? Like, to have more exposure to Bitcoin, maybe on the balance sheet or in different ways. How does that change people's thinking?
I think I'm kind of personally, especially with the way the ETFs now shape a lot of the narrative around Bitcoin, is just kind of a true divergence. It's always kind of been there in people's consideration of it, but what is the store of value? What is the maybe speculative investment or an asset? And then what is also the true utility and functionality that it brings as far as your ability to transact and send value to another person or business without an intermediary. And so those kind of use cases, I think, will diverge, and we'll have like a very strong version that pairs with people that might just want it on a balance sheet as a investment asset. But then I think for either where it's industry specific or just more in the popular mind share, is in the last few years, you've seen between bank failures, a lot of other startups were on Silicon Valley Bank and other banks that went under last year. I mean, that was a massive shock to people and a massive realization for a lot of others about how money works and doesn't work. And so that actual utility of Bitcoin as an asset you can hold, that for many businesses that held a lot of Bitcoin through that period, you slept easy for that part of your treasury that just was not in those institutions that were failing counterparties for you. So that's one way I kind of differentiate the ideas.
I'm curious, before we move on, Joe, have you seen any businesses who work with, who hold Bitcoin at Unchained, leverage their Bitcoin position to access liquidity, for example?
Sure. Yeah, one of the products at Unchained is you can take a loan where Bitcoin is collateral. It's not, depending on the business, it's not always part of what it needs in its course of business, but whether you're a miner or you have a really strong investment use case for that Bitcoin, then you have an investment use case for the dollars you might get as proceeds in a loan. That happens for sure.
Joe, what's your take on why people should be on it? What does it mean to be on a Bitcoin standard as a business?
Yeah, I think it's I've talked to quite a few people who ask me, hey, I have this LLC, should I buy Bitcoin for it? Is there an advantage to it? And it's, from strictly a tax standpoint, if you're an LLC and it passes through to you as an individual, there's no real difference there. But I think it's a mindset thing where, how do you actually think about your business? How do you think about those business decisions? Is it make more sense for you potentially to hold some of your savings in Bitcoin, knowing that it's going to be volatile, but maybe you're saving up for a project that you want to do, and maybe it doesn't need to be for 5 years, right? And you'd like to do it next year, but you're willing to understand that volatility and be exposed to a volatile asset, but you want to put the kind of the fruits of your labor, your proof of work that you put into that business, you want to have part of that allocated into Bitcoin from a long-term strategic standpoint, the same way as you do as an individual. And so it's not one of those things where, hey, I'm getting a better, tax rate or anything like that. It's like thinking about your business as a separate function than you as an individual or a family or whatever it is.
Makes sense.
Yeah, I'll take a different approach on this. Is like we talk a lot about the benefits to you as the merchant or as the business owner, but I think it's also better for your customers, right? Is that you will be delivering a better customer experience when you invoice, charge in Bitcoin. Like one example of that would be in the e-commerce case. Is I don't have the figures in front of me right now, but the billions of dollars lost in fraud from credit card fraud online is something that mostly affects the end customer to start out with, and then affects you later on when it gets clawed back. Is that you can do transactions online in a much more secure and a much more private way if you are charging in Bitcoin. Not to mention the final settlement and the benefits to you. Same goes with in person, and same goes for things like invoicing. Is that your customer experience can be both faster, more secure, more private than they can be otherwise, and so you're differentiating against some of your competition at least early on by saying like we're respecting our customer by giving them this option to have this better experience that doesn't open them up to as many attack angles as the fiat system.
Especially if you're the only one in your industry doing that, right?
Bingo. Yeah.
Yeah, it's interesting. I was just remembering, just yesterday I started listening to this podcast episode where Preston Pish is interviewing Leon Wauncom, who's a real estate entrepreneur. And so what he explained is that in their business, they actually, when they buy a piece of real estate now, they have a budget that's specifically allocated to also hold Bitcoin. And that Bitcoin is an inflation hedge, and it's meant to cover the maintenance costs of the building so that they are more certain that they'll be able to keep paying the mortgage on that piece of property. So it seems like there's many examples that we're all exploring. I have a question about some of the challenges. Like, what are some of the challenges that people can or should anticipate as a business owner putting your business on a Bitcoin standard or adopting Bitcoin, in terms of accepting payments? Are there any, like, Joe, you already mentioned the cycle. Like, if we are, for example, in a bear market, it might be harder to actually find customers that are willing to pay, in Bitcoin. But are there any other challenges? I'm thinking about maybe, the fees spiking or things like that. Like, are there any like technical challenges that people still should think about or just be aware of?
Sure. I mean, like, I'll take it from like the fees and stuff like that. Is again, if we were talking about this 5 years ago, I would have been more worried with the fee spikes in 2017. But we have a lot of what we call like layer 2 solutions that are not on-chain Bitcoin transactions, right? On-chain Bitcoin transactions can be fast, they can be slow, they're a little bit unpredictable, even though they're final settlement, and there's very limited space for those transactions. But today we have things like the Lightning Network or Fedi that's being worked on in the room over there, or Liquid, where you can affect not necessarily final settlement, but very close to final settlement in seconds, is fast or faster than the legacy fiat networks. So on the technical side of things, I think that we've never been in a better time. And in fact, it would have been a struggle before for you to adopt a Bitcoin standard or even a portion of your business into Bitcoin. But because of those vendors and core technology that's been built up over the last 5 years, it honestly, it doesn't feel all that much different. It will feel very familiar, but also delivering that great experience.
Right. Any other challenges that come to mind?
Yeah, I mean, I would just say, Marty touched on this a little bit of just like having really good cash flow projections and forecasts of like knowing actually what your risk tolerance is there, so you don't get caught off guard. So like your planning becomes more important than it ever did before when you were just receiving fiat. Kind of knew what roughly that would be worth the next year. It'd be worth a little bit less, right? Versus maybe a lot less or maybe a lot more.
Right.
Yeah, and on the other dimensions of what are some challenges for businesses, it's a lot of the stuff that was talked about today of secure storage, who to trust around advice or things like that with Bitcoin. That's where Unchained has really kind of put a lot of our focus, is bringing peace of mind to businesses and individuals that want good recommendations and sound advice on all manners of holding Bitcoin.
Yeah, and I guess it's also part of the same theme of like one other question I had is about how to stay legally compliant, how to do accounting. How do you as a business owner kind of not shoot yourself in the foot? So maybe Joe, you can speak to that. Like, what are some of the things to really keep in mind?
Yeah, I mean, it really fundamentally comes back to having really good records and tracking system. So any Bitcoin you receive, knowing what you received at from a cost basis, and that's fundamentally your building ground for how you're going to report that revenue, how you're going to report the gains or losses if you end up selling that Bitcoin. And so it's not overly complex. You can set it up really easily from the start. The problem people get into is they do it 6 months down the line or a year down the line, and then they have all this catch up to do. And so starting early, day one, is really kind of the critical thing there. And, there's a variety of options out there, to the extent that you're doing it through an exchange, they can track some of that for you. To the extent that it's, self-custody, you have products like Zaprite can track your cost basis for, invoices coming in. But make sure you have a strategy on that before you do it.
Right. Yeah, and maybe to wrap up this panel, maybe thought of a question about managing like debt liabilities, and to me, like tax liabilities are in the same bracket because like it's a debt that you owe. So, and I mean, all of you have been in the space for a long time. We've seen how crazy volatile things can get. Even in a bull market, like we have these violent pullbacks and then people didn't expect and are overexposed. So yeah, just any thoughts that might be helpful to people that are newer to this experience on how to, step in it with a good degree of confidence. Yeah, just any of your thoughts.
For me, Bitcoin has been one of the most thrilling and more deeply impactful intellectual journeys, if nothing else, to really understand more about how the world works, how money works, and a lot of things you kind of just take for granted about these systems that are so important. And money is a device for producing revenues, and the revenues are denominated in money. And so I just think the kind of things that when we say a Bitcoin standard are those things, and what you as a business owner can then, how you can kind of reconceive of your business's place in society, and how you can reconceive of what money you begin to actually care about. I think there's kind of some real like things that can shift in your mindset about that type of thing. So that's what comes to my mind, especially as price so dominates the discussion. But that's really, for me, back to my point about that's only one side of the kind of fork in the road of how you can conceptualize Bitcoin, and the clearly other side that has a lot of value for you as a business is, I can receive payment from people without an intermediary, without being shut off or questioned or having capital held by a payment processor longer than you expected. And likewise, on the flip side, you can then transact with those dollars, make payroll, or the value of your Bitcoin, make payroll and things like that without concern for those intermediaries.
I wonder if that's also why it seems that a lot of vendors, when they start accepting Bitcoin, they just kind of as a default keep a part of the Bitcoin that they receive and put that in their own, long-term storage. Because then it's like, I don't have to think about selling and all the tax consequences. I'll deal with that later. And then I'm kind of letting the market decide how much Bitcoin it's going to give me. Does that in line with what you said? Yeah,
it's a type of hedge. I feel like there's like the hedge on the price and other reasons, a hedge on other counterparty failures. And then I like the idea of, just being open for business for Bitcoin and then seeing what the market tells you.
Yeah, I think just touching on that a little bit, like if you opened up as a merchant to accept Bitcoin tomorrow and you got 10% of your revenue in Bitcoin, that would be amazing, right? It's very likely to be much lower than that. And so like that price volatility exposure is not a huge deal at first, and that it's a relatively small portion. I think one other piece probably to touch on is just, if you're in, local Austin community, for example, Bitcoiners are likely to also want to do business with other Bitcoiners. And so there's a community aspect there as well. As the community of Bitcoiners grow, as more people hold it, whether it's self-custody, ETF, just knowing about it, right? That branding on your business has some value as well. It's hard to put a number on it. But being the first one is always going to be like, it's going to have its difficulties, but it puts you in a unique position as well.
I'm going to sound like I'm joking, but I'm not. I think you should, if you're just starting out on this, like get an amount that you never want to sell ever, or you never want to get rid of. That's a good way to start. You don't have to deal with all the other consequences in that case. If you need dollars, I have news for you. I hear they are making more of them, and you'll get them, right? But start with an amount that you're comfortable with, that you don't think is going to, unless there's something catastrophic to your business that you can hold on to, right? The next thing you should do is start studying up on how to rebalance things, because like with many people, what happens over enough time is it starts as 1 or 2% of your balance sheet. And then with you doing nothing, it becomes 70% of your balance sheet. Now you got a problem, right? But it's a good problem to have. So that would be my advice.
Yeah, absolutely. I really agree with Will on that. Like, it's sometimes key to actually not rebalance and not to over-engineer your approach, just to like take a position and commit to letting it ride for 4 or 5 years, and then slowly coming up with a long-term plan as you understand the market better and the asset better. So I think we have a few more minutes, so let's open it up for questions from the audience.
I had a similar thing happen. I used to live in New York, and I had a friend who opened up a very popular pizza place, which you have to be pretty brave to open up a pizza place in New York, right? And I was trying to get them to accept Bitcoin, and they just wouldn't do it. And then I found they were doing mobile operations around the city. They go to Madison Square Park or something like that. And I said, just for these pop-up shops, make it an option, right? And so he did, because it's not their main business or anything like that. They accepted Bitcoin. I helped them custody it and all those types of things. This is back in 2012. And then in 2015, 2016, they're like, oh, thanks for that. Like, it's going to save our business, right? So start with something small, right? Like something that doesn't seem threatening to their business at all, but they could see the upside in what you're pitching them.
Any other questions?
So if you're just accepting Bitcoin, just like if you're accepting US dollars, the price it is at the time that you received it, that's going to be the US dollar value that you'd recognize. Once you sell it, you might have an additional realized gain or loss, but just from the start, it's the same as the US dollar.
I guess to add to that, do you have any recommendations to your clients in general about whether or not they should wait to get the long versus the short term capital gains?
Yeah, I mean, it kind of depends on your situation. It's one of those things where if you fully on the Bitcoin standard, where you are receiving money in Bitcoin and you're spending that Bitcoin in a short term, you could have short term gains and losses there, and it's not a big deal. And that you might make a little money 1 week, you'll lose money 1 week, but ultimately it's the total amount of Bitcoin that you're saving that's accumulated. Versus it's a kind of rare thing where you want to get into that long term capital gains. Just to kind of cover long-term capital gains, you're taxed at a lower rate versus short-term. It's treated as kind of traditional income there. So that's certainly a strategy, but it's kind of depending on the individual, what's best for them. Did that answer the rest of your question?
We had another question there. Yeah, go ahead.
Yeah, I would suggest there's lots of good mobile apps. They're mostly custodial, but it's a good place to start. I like to say River is a great one. Cash App, which a lot of people already have installed, right? It's just as popular as like Venmo. Those are probably the two I suggest the most often, right? And yeah, I mean, your strategy of offering a discount, like I really think it's the merchants and it's the business owners that it's not a chicken or an egg problem. Even the people that have Bitcoin a lot of times don't want to spend it. If you want their Bitcoin, you're going to have to offer them something to get it from them, right? So I think it is up to you to start this process. And then if you're trying to onboard them, River, Cash App is a great place to start. There are others out there. Even PayPal has Bitcoin now, although I don't like the way they do it. But I would start with those apps.
It needs to be really simple.
Very simple, yeah. I would say Cash App in that case, because like the odds of that customer already having Cash App are pretty high, right? And that the Bitcoin conversion in there is super simple.
What are your thoughts on the discount versus the premium? Because I know you guys built that into Zaprite and probably a purpose for that, right?
Yeah, they both work. We like at Zaprite to frame it as a premium for paying in dollars and of any kind versus a discount for Bitcoin. I like the idea. There's these concepts of like value for value in the Bitcoin world where you're not trying to discount what you do. What you do is valuable. And your customer sees that value, that's why they want to pay you. So the price is in Bitcoin, and if they insist, they can pay in dollars, but it's going to be at a premium.
Yeah, when I used Zaprite to buy Parker's book, I paid the 10% extra because I didn't want to sell my Bitcoin. But just to add, I've been using Cash App for the last 2 years, and it's it's a really great app, and you can tell they love Bitcoin because, for example, you can also buy stock with it. Like it's just this all-in-one app. But if you go to this little stock portfolio, you see your gains expressed in dollars. But when you go to the Bitcoin balance, it'll only show you the value of your Bitcoin. So it's really like presented like this is your savings account. Like who cares at what price you bought it? This is the value today. And yeah, it's super user-friendly. And I think they have like Lightning withdrawals.
Yes, they do Lightning and on-chain withdrawals. Now, there are limits and stuff like that, but you're not accepting on this. It's other people paying you, so it's usually a few $100s or something like that, the maximum. So usually those limits don't really matter.
Yeah. Final question?
It has been historically a mixture of factors. One big one was something that came up in Joe's presentation earlier was the accounting treatment of Bitcoin. That for a long time, the way it had to be held, it wasn't held like most assets. It was kind of a thing you put on your balance sheet and then only mark down when, if you're buying it for investing or like long-term holding purposes, you'd like for it to, as its price goes up, continue to be marked up on your balance sheet. So that honestly was a practical concern for a lot of folks. Then it's kind of next storage. And then thinking through, well, where do I put it? What's the custodian landscape? Who do I trust? And a lot of people in those kinds of positions or in those treasury functions have just heard things or things that get lumped together with the FTXs and things of the world. And so when they're kind of exploring that space, it's, I think over the last year, at least for us, when we talk to clients, it's kind of been a rebuilding of trust or helping them re-navigate to good solutions like Unchained that try to prioritize no single counterparty holding the Bitcoin or holding the keys to that Bitcoin. So that is probably the second major factor is just all right, is it going to sit there the way headlines read as to like people losing Bitcoin and disasters happening like that? How exposed are they suddenly if they decide to buy it?
Well, that's it for us today. Please get up for our fantastic panel.